I love the positive connotation that they're trying to put around this, calling it Liberation Day. I don't know if I would name it as such. Look, it's just a part of
Carnage Day instead.
Carnage Day, Liberation Day. I think Carnage Day is probably a more accurate description. Look, this is just classic Trump shock and awe in trying to get the counterparts to the negotiation table to try to get a better deal for the United States. So from that perspective, technically, I can understand where his mind may be. The way he is going about doing that, and the fact that there is a continuous news cycles and news flows, which is sometimes contradictory, is what's making it very difficult to price any asset right now. If you take a look at the commodities markets, it's crazy, because on one hand you're talking about secondary sanctions on Venezuela, oil fine, potential Russia-Ukraine deal, which may bring Russian crude back into the market, which is a completely different game, and now a potential secondary sanctions on Russian oils. I mean, it is very difficult to price anything at the moment, so we are taking it day by day, and hour by hour sometimes.
Hour by hour, it is that detailed at this stage. Talk to us about how you're reading U.S. data at this stage, because consumer sentiment has dipped. People now in the United States are actually expecting inflation, their inflation expectations actually risen as well. Do you see meaningful reason for concern coming from the U.S. economy as of yet?
No, I don't. I don't see any meaningful concern in the U.S. economy. Now, Karen, you know that I'm a Eurosceptic most times, and I have to admit that obviously Europe had a much better quarter than U.S. did. I think that's also partially driven by the fact that perhaps Europe has woken up a little bit in terms of what they have to do to try to plug in the innovation gap. But I don't think that they have done enough yet. So I do still believe, and I am long US in relative terms compared to Europe because of that innovation gap that Europe has. And I think the American investors, because they are bearing the brunt of the volatility of Trump policies at home, are finding it difficult to price what Trump means and what Trump administration can do. Everything is relative. So taking it back into the European numbers right now compared to the US, the AI story is going to be challenging. Now, we are all focused on April 2nd, the Liberation Day. What I do think we should focus on also is May 15th, which is the AI diffusion rules coming into effect, which will actually make it make countries subject to licensing agreements with the US to be able to utilize US AI resources. I think that is going to be the day that we will see how both regions react. On top of that, obviously, there is this European rearmament fund that is started at 150 billion euros. I think that's going to exceed €1 trillion going forward. On top of that, you have the Draghi report, famously, that has pointed out that Europe needs to find 800 billion euros a year to spend just to remain equidistant to China and US in terms of its innovation positioning. So what does that mean in terms of borrowing? I think we are likely to witness the global bond markets expand. I think Europeans will have to borrow, Americans will have to borrow. So in that context, what I'm saying is that short-term pain in the US, I'm not concerned about recession in the US that much, but in the longer term, I think US is going to positively decouple from Europe.